Hi, this is Bill Wood from Disciplined Trading Decisions, inviting you to take a look with me at the S&P 500 Emini futures contract. You can watch over my shoulder as I analyze the market, but first,
Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results.
Okay, thanks for watching, and make sure you subscribe to my channel. Here we are looking at the ES on a monthly chart. Let me just get rid of this here. And you can see the last several months we've been in balance. This whole area here is a nice big balance area. And if you take a closer look, you can see that we had a 2-month balance here, a 2-month balance, and what happened this particular so far is that it has peaked out of this balance, and so far this week it has closed back within this balance. So sometimes when that happens, it can retrace all the way back to the mid part of the balance to maybe even 70%. Let's take a look at the weekly. Okay, if we take a look at the weekly, you can see that 2-month balance here. We broke out of that 2-month balance on fairly light volume, and we could not hold above it. We closed this week back within that balance. There's a possibility that this could come back to the midpoint of this balance area. Again, I say there's a possibility. I'm going to give you reasons for the market to go up and reasons for it to go down. I'm not going to predict what actually is going to happen. Okay, again, the weekly chart, looking at Elliott wave, and remember, Elliott wave is subjective. I don't know if these counts are right, but I'm looking at possibly wave 1, 2, 3, 4, and we're working on wave 5 with a very extended wave 3. Closer look at that, I have 1, 2, I'm not sure if 3 and 4 are in here, or this is 3 and this is 4. Let me show you how I came up with 4. Okay, this is a daily chart, and here's wave 3, wave 4, and we're working on wave 5. Well, I see a wave 1, 2, probably an extended wave 3 here. Now, some people believe that this bull market is over, that this is actually wave 5 of wave 5 of wave 5, and we're heading down from here. And about a month ago, I was looking at this and wondering if this was going to be an ABC, and it comes down here. And got to give credit to Ning Wang. He made a comment that this might be a triangle. So if we look at that now, we have the A, B, C, D, and E, which would make wave 4. An alternate count would say that we're still in wave D. Wave E is going to come down here, and then we're going to take off from there. But the bottom line, as far as I have it now, I have this as wave 3 and A, B, C, D, E, wave 4, and now we're moving in to a 5-wave move higher. If this is wave 1, a pullback would certainly make sense for wave 2. As we said on the monthly and weekly, maybe to somewhere in the middle of this range. As we look at the 4-hour chart, we can see how this trend line here was broken and revisited. If this is wave 1, this could be an ABC and come back and revisit this channel. Okay, this is a 30-minute chart. I know it looks messy here, but this is that wave 1 that we were talking about. And we're wondering if this could be an ABC move down for wave 2. If this was an ABC wave down and C was the same length as wave A, well, then we would come down here to approximately 100%. This is that channel that I was talking about. It broke it, kissed it once, may come down and kiss it again. That may be down in this area. I drew this channel here, and this is the opposite end of that channel. It could come down to the opposite end of this channel for the end of wave 2. If that's true, it looks like it would go past the 100% level of wave A. So maybe it could come down to 161.8 of wave A, and that would also coincide with the 50% mark of this wave, and also the high volume node here. Note that this area is in a low volume node area, but that is if this is a C wave of wave 2. The alternate is that this is the end of wave 2 here, and we're doing a 1, 2, 3, and we're going to head higher. There's nothing saying that this wave couldn't come all the way back and test this breakout point down here. But this is my first decision point. This is my next, and then of course if it breaks out from here, all this is wrong. So if it does come down further, the 100% mark is at 26.91. The 50% mark is down here around 26.66. Oh, that's a pretty scary number. Okay, this is market profile. If the market did continue to go down, this may be one area of interest in here between 26.80 and 26.90. You have these single prints in here. Often the market will come back in here and repair it. You also have a prominent point of control here around 26.65, and you have these single prints down here where we broke out from. Okay, a closer look, we see that the market opened here. We had a weak low down here. The market came down in the third half-hour bar and broke this level, and there was rejection down here of lower prices. The market came back up, came back within the previous 2 days value area, but it could not keep value up here within this value area. The market closed here, so come next Monday, next week, we want to see if this remains an area of rejection. If we start getting 30-minute bars during the regular session hours, we start getting 30-minute bars down into this area, then we are getting acceptance at these lower prices. And often that's a sign that prices will go lower. On the surface, it looks like prices will go higher. We have rejection down here, and we have a poor high up here, which means poor highs are often revisited and repaired. But from the things that we looked at on the larger time frame chart, there's a very good possibility that we could test lower, as in a wave 2 correction. We have this low down here, which doesn't really look like a completed auction, and we have 2,700 down here, which may be some magnets for the market to go lower. All in all, my bias is for the market to go higher. That is not a trade recommendation, but before that happens, perhaps a wave 2 pullback. So we'd have something like this, wave 1, wave 2, and then 3 waves, maybe up to 3,000, maybe higher. Of course, the market may not go up at all. The opposite may be true. This could be the end of the bull market right here, wave 5, and perhaps, this is wave 1 down, wave 2, and this is wave 1 and wave 2 of a larger extended third wave where we really take off from here. So I hope that was a help and it wasn't too confusing. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out some of my other videos. While you're there, make sure to take the special traders quiz to discover how to improve your trading. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to do and believe your own analysis in order to stay disciplined to your trade plan. Hey, I would really appreciate your likes and comments and shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.